All right, so it's Monday, January 3rd. Markets are about to close here in 10 minutes. It's a brand new year, 2022. Everybody's just getting back from a long weekend, New Year's Eve, New Year's Day, vacation, volume starting to come back in after the holidays. What I like to try to do at the beginning of the year, I like to try to be very, very observant what's going on across the board. And for me today, I've seen a lot of stocks that were priced around $3 to $5. Those were the pretty hot stocks of the day, I would say. Wave was one. This was had some after hours action, New Year's Eve. It's starting to pick up a little bit here at 5. It's nothing worth paying attention to, but it's hitting my scanners. That's what I care about. If something's just starting to heat up and pop off on my scanners, and I pull up the chart and I say, hey, there's potentially still some potential on this. This may be the beginning of something forming up later on, you know? It could be insiders picking up shares before they drop a press release. Maybe somebody picking up shares, they know something. It could be a guru pumping this stock. He's loading up before he announces it to his sheep. So anytime I pull up a stock that's just hitting the scanner and I do see potential, I'll think maybe it's starting to heat up and this is the very early stages of something big down the road. So I'll throw it on my watch list and just observe it the following days. And it's important to do that. As I tell you guys, you want to look at yourself like you're a detective in the market. You're putting together the pieces and the hints to tell the story. So Wave was something that popped off. RELI. This took a bit of time to get up and going. We'll come back to this one. That's what we'll do. We'll come back to RELI. LDI, real fast snap up on it. AUVI, just back and forth from 3 to 350s. But you get the hint though. A lot of these stocks are around $3 to $5. SINO was another stock that popped up. They're not even really eye appealing. CING, this is something that popped off real quickly on the scanners. And this is the type of setup. This is something that would catch my eye. And I already mentioned this stock in the chat to you guys. This is something that would catch my eye, and I'll continue to keep eyes on it for any follow through down the road. Looking up at the daily chart, let's pull that over real quick. So we got the daily chart here. It's a newer IPO. It opened up here December 8th, and it opens up here at around 5. And after it IPO'd, it got drilled all the way down 50% to $2.30. Now it's rounding out right here. It's got a nice rounding bottom forming on it. It's been breaking that downtrend and trending up. So when I look at this, now let me get my marker. So when I look at this, all I see is a nice rounding bottom forming on it. That's good. That's bullish. I've taught you guys to remember rounding bottoms are bullish. Rounding tops, they're bearish. So now that we got the daily out of the way, one more thing, focusing on your big levels of interest. So $3, if it breaks over 3, it can run up here to 350. Then you got 4, and then $5 is not too far away. There's potential on it. Over $5, who knows how far it can go. Now we look at the 10-minute time frame. We're doing an X-ray on the daily chart. We're looking deeper inside of the body. We see it was in a downtrend. Now it's starting to establish itself. It stopped making lower highs and lower lows. It stopped doing that. Now it's making higher lows and higher highs. You see that? And once again, you got your rounding bottom action going on. So if we get up over that 3, we can go up to 350, then 4, and then your 5 is up here. Always try to think ahead and take it in levels at a time. Now that if this keeps moving up, we know more people are going to start to pick up on it. More eyes are going to get on it. Then that's when your long-term investors will come in, your swing traders, then your day traders will come in. So we're perking up over these moving averages. If we can keep leveling up, like I said, this may be something good down the road. And who knows, this company puts out a press release and we've been keeping eyes on this, and we wake up to a gap up to, let's say, 450, it's on. This stock's going to be in play. So a lot of stocks between $3 to $5 today. That was like the theme for the day, right? That's what I've noticed across the board. And with that being said, the stock market's very trendy, very, very trendy. So always being observant and on your toes. What patterns do you see over and over and over again? When we woke up this morning, we had IMMX was the top stock on the gap scanners. This was gapping up from 350 to a high of 7. And as soon as that market opened on this bad boy, from 7, it immediately runs up to 770 and into a halt. And if you guys look back in the chat, or if you were here this morning, I was trying to tell you guys, this isn't something that you really want to chase after out of the open. Because how many times in the past have you seen stocks like this and get all excited and you get all caught up in the moment and you disregard or ignore your emotions and you join the crew and get in on the excitement and you jump in as soon as that bell rings and you get met with a huge death candle on it or something? So the way I try to look at it, yeah, this did shoot up right out of the open, but everybody who chased after this, they got rewarded for bad behavior. Now, next time when this happens again, it's not going to be a pleasant story. They're going to blow up a third of their portfolio or even half of their portfolio chasing stocks right out of the open. So it's a bad habit to have. Don't get rewarded for bad behavior. It opens up at 850s, but that was the end of it. This thing got drilled all the way back down to 650s, and then it was in a range from 650 to 850, a nice $2. But as we were saying once again in the chat this morning, it was back and forth, but it was like a tilted back and forth, back and forth. We can easily plot on a trend line on this. Kind of like that, I'll say. Now, whenever you have a stock that's just grinding up with an upward tilt to it like this, it never ends well. I've even said that to you guys in the chat, and look at where IMMX is. It's all the way back down now to 550s. What I call it is the truffle shuffle, or the shuffle. It's got a slight tilt up on it, and it's just grinding back and forth, back and forth. It never ends well. It never does. And people who were taught to buy high of day breaks were at a nice $8 here. Let's draw a resistance line out on that. Right there, that red line. People are taught to buy high of day breakouts. Newer people are. So as soon as this breaks $8, they're buying. It gets a real fast snap to 860s. And if you didn't lock in profit as soon as that thing was ripping, you got screwed, because this thing just dropped all the way down to 750s. Just like that. So that's why it's not good to chase after breakouts and high of day breakouts. You always want to be that person selling into these moves up here. That way you're taking the dumb monies who's chasing after it and it slams down on them. Another example of the truffle shuffle. Now, if you guys hear me in the future mention truffle shuffle, you'll know what I'm talking about. CELZ. This is another example of a truffle shuffle right here. So the stock ran up and it pulled back down, and you see how it's just tilted slightly up and it's just grinding up. Truffle shuffle. And it fell all the way down to $3 from 350s. It's just a pattern that I've noticed in the past, and I'm passing it on to you guys. Friday, New Year's Eve, NTRB was the #1 stock, running up pre-market from 4 to a high of 7 just before that market opened. And right when that market opened, we got a pullback near 650s, and this thing just lit, rifling up to $9, then exploding all the way up to a high of $12, and then just consolidated the rest of the day. Today it was trying to squeeze, but it just didn't happen. The area it stalled out was right here at $10. We mentioned and said in the Discord, yeah, the truffle shuffle, the Goonies. We mentioned today that $10 was the trigger level for NTRB. Not only is that a good psychological level, but remember back when I was telling you guys, I believe it was last week, I was telling you guys, the way I look at these charts, I visualize and I draw an imaginary line with my eyes. And it's somewhat like this. It's an invisible line, and what I'm visually trying to see is how tightly are they pulling this back and keeping it from spiking to the upside. So from yesterday or New Year's Eve, this topped out at 10 o'clock. So since then, this has been in a very, very, very tight pullback all the way into the new year and the next day. If this would have went, it should have been right there. But now that this is lifting back up to that 950s 10, it could still break that level. And if it breaks that level, it's going to be a big move. This stock is going to rip all the way back up to its highs up here near $11.50, $12. And then who knows how much further it will go from there. I mean, it can go to 15, it can go to 20. The potential is there. The stock can run. Whenever I look at a chart and a stock, and people ask this question, well, how do you anticipate or know a stock is going to rip that much, Mr. Wolf? Well, look left, man. The stock has proven to you before how much potential it can run. It can do that again. That's the stock's personality. So New Year's Eve, it did it twice for you. Once pre-market, right here, running up from 4 to 750, and then the first half hour of the day from 650 to almost 1250. So that's a $6 run right there, right out of the open. And then it was in a $2 range. So I think it's safe to say that the stock loves to move. Exactly, Rome. You're getting it. You're starting to see it, put it together. That's the way to do it right there. It's not about, see, that's a perfect trend line that something I would draw out. When people draw their trend lines, sure, you can connect to the T all of your highs that connect and hit that trend line, but It's just in my DNA. I don't like to be like everybody else because I psychologically know everybody loses money. I know this. So why do I want to think like them? That's the way that I like to think, you guys. So I always try to think different and do different than everybody else. When I draw trend lines out, I'm just looking to see how tightly are they pulling it back and how obvious it is that they're keeping it and holding it back from ripping to the upside. So by drawing out this line, I'd move it down to here. Visually, you can see they're holding this bad boy back. It's failed so many times. 1, 2, 3, 4, 5, 6, 7. It tried to hold it all up right here. That's 8, 9, 10, 11, 12, 13. So that's 13 times right there. And then we had this morning. It tried right there, and it tried right there. Then it tried again right there, and now it's just slowly moving up right here. So that's a total of like 16 times it tried but got denied. Now imagine when that momentum does hit, how far this could go. We zoom in a little bit here this morning. This is the potential of momentum coming into NTRB. When this thing lifted from 850s up to $10 like that so fast, and then it collapsed super heavy, that's the potential of momentum that could come into this. Just how fast it ripped up $1.50, and then it clearly said, hey, it's not the momentum. The time is not now, is what it's saying by how quickly it crumbled right here. A lot of people, they would get freaked out and scared away by a move like that. Now, I'm not going to get freaked out on a move like that. I already know that's what the stock likes to do by just simply looking at the previous day's action, right? Clearly you can see it did that all day. So why would that death candle freak me out? It did it 1, 2, 3, 4, 5, about 5 times New Year's Eve with those big flushes like that. It's all in the way you look at these charts and you pay very close attention to the personality that the stock likes to have, right? So now that we're in after hours, heck yeah, this thing could definitely keep going, break over that 10 and start skipping up. If you're going to trade after hours, you guys, be super, super, super cautious with your size. Maybe only trade 25% of what you're used to trading, because as soon as that trend fails or falls and breaks, you're going to be trying to catch that stock on the way down. And you've seen some pretty big sell-offs after hours with these stocks. I don't really stick around much for after hours trading. I was taught that after hours trading is for degenerate gamblers, and that's just something that has always stuck with me. It's just personal. It's when I heard it, I was like, yeah, that makes sense. And from there on out, I don't do much trading after hours. I think it was Tim Sykes who told me that in one of his videos. So who knows how far NTRB goes? JWEL, who knows? We could wake up tomorrow and this thing could be gapping up to $12 or $13 a share. Who knows? But it hasn't broke that downtrend yet. Until that downtrend is broke, then maybe we'll take a look at it. You could slap on a trend line kind of like that. It did break it right here, pulled back and hold it. Now it's just working up in levels. So you'd be looking for it to hold up and above $8.50, $9. And that trigger level, everybody knows it's going to be 10 bucks because everybody thought it was going to bounce right there at that 10 bucks as it was bottoming out and wedging out. And this is a perfect example as well for you guys to save the chart and tag it. Just because stocks sell off does not mean they have to bounce. They don't have to do anything. Remember that. So let's write that out. We'll write that out real quick on the chart, and I'll let you guys take a snapshot of it to save it for your files. Just because stocks sell off, they do not have to bounce. They do not have to do anything. We keep eyes on them though, because it is popular to look out for stocks that have big sell-offs for them to bounce. That's a real popular strategy that a lot of traders have in their playbook. And we do see a lot of good bounces. But always be scared. Always be scared. Think differently than everybody else. Now, everybody who bought in on this, there's a few ways people are buying in on it. People are accumulating as it keeps going lower, anticipating for that bounce. And then you had everybody who was all buying in as it was consolidating here, saying, yeah, this is ready. This is ready to roll. So now if we do get that momentum and burst to the upside, you're going to run into all of these bag holders. Everybody who was buying in at 10, they're hoping now for it to come back up to 10 and they can at least break even. You have the guy who kept averaging down on his positions as it was going lower and lower and lower. He's waiting for prices to rip up on it. There's multiple different strategies that are out here in the markets. That's why I like to call them cult followings. Because newer people, when they come into this, they think it's all about learning a trading strategy to make them money, right? I mean, look back when you were new. What were you thinking? It's all about finding that secret trading strategy or that secret indicator to make you money. And slowly, as you guys got more into this and you've joined up here, you realize it's like, well, it's about technical analysis, but it's all about knowing who you are. That's where you really start making the money once you start finding out who you are as a person and then developing strategies that fit who you are as a person. This can be easy, guys. It can be easy. You just have to learn this game and understand yourself. We're the very few, the select few that understand this. Look at Irish Wolf. You guys are probably going to be mad at me for saying this, but Irish went off and posted his playbook PDF the other day, and I clicked on it, and it was filled with years and months of work and all of his plays and strategies, all of his notes. It was a very, very, very well done playbook. And I sent him a message and I was like, dude, I don't know if I'd be putting that out for everybody to see, dude. You put a lot of hard work into that to just give it out to moochers for free. And he's like, yeah, you know what? You're right. I was thinking about that. And that's the truth, you guys. You guys put in all that hard work. You deserve the hard work you put into all of this. If anything, pass it down to your children, your grandchildren, nieces or nephews, or very close friends. But this stuff that we learn out here, that's valuable stuff, and that's stuff you just can't freely give out, because once, it's the saying, once too many people know about it, it won't work anymore. Just like the can slim topic we were talking about briefly this morning. The can slim was a very, very, very popular trading strategy in the 80s. And then everybody and their mother started using it. And then one day it stopped working. And since then, it's been a theory ever since. And it hasn't worked. So let's talk about LCID. This was a very popular stock last year. Today it had a good move from 38 up to almost $42 a share. Now we all look at opportunity in different ways, you guys. We all look at opportunity in different ways. If a stock is moving and is volatile and it likes to move effortlessly around $2 or more per share, I don't really care what price it is. I see opportunity there. I mean, a stock is moving $4 in a day. All I need is maybe 100, 200 shares. Catch a $1.50, $2 move in that. That's good money to put in your pocket. You don't have to buy that many shares. Psychologically, it's less stressful versus, let's see, something like GNPX, for example. This was at $1.50. Yeah, it ran up to $3.50. It doubled in value, but it took all day to make that move. It's grinding pennies at a time, and you really have to load up. You're going to be buying 10,000, 15,000 shares to make decent money on something like this. Not all of them are going to run up like this. At most, they're going to run up maybe 50 cents, maybe $1 if it's a fantastic day. But these lower priced stocks, the more they move, the bigger, higher percentage it is that they move. So if something's at $1 and it runs up to a lousy $1.25, that's only a 25% move. Now, if it runs up 50% to $1 to $1.50, that's a 50% move. In the stock market, financial people, they always look at percentage movers. We already know something that moves 75 cents, 100%, that's unreal. That's insane. So in small cap land, look at it in that reality as well. There's just a lot more risk with these. They're more of lotto tickets, to be honest. And you have so many noobs and newer traders out there throwing in all of their money on this, scalping it nanoseconds. It's gonna, most of the time, it's gonna lead to confusion and anarchy, pretty much. You don't know what's gonna happen. That's why I try to stay away from them. DWAC's been getting super, super tight at this 5150s. I mean, even every day on DWAC, it has good range on it. This thing can skip a few dollars at a time. I'm going to continue to keep eyes on this the following days, following weeks, because all it takes is for that press release. If they drop a press release, this thing could instantly run up to 55, blow over that, run to 60. It's just, I'm stalking it. And I'll stalk a stock for days, weeks, if I see potential in it. BBIO was another name. It was hot New Year's Eve. This morning, it had a little bit of a dip here to 1550s, but overall, it held trend. Looking at the 10-minute, that morning dip really didn't even phase BBIO as it continued to hold and kept trending up. So always focus on that big picture. Always. Don't get caught up in the micro time frame like this and let something like a morning dip like that scare you out. Always refer back to that bigger time frame and say, well, it could fall all the way to $16 down here, or even 1550s, and it's still holding trend technically. And sure enough, what happened? It ripped right back up, was trying to hold up at previous day's close, in and out of it, and then all the way up to 1750s. Always try to keep that bigger picture in mind. If we keep trending up on BBIO, Sure, we could see this thing get that euphoric explosion to the upside, 20, break over 20, get a good run to 25, maybe 30. The opportunity and potential is there, and I like to try to have an open mind that that could happen because we've seen it before. We've seen it lots of times before. Hair, real fast, rip this morning up out of nowhere. This may be something to keep our eyes on, maybe for down the road. This thing ripped from $7.50 to $10 a share. When a stock rips like that and speaks, I'm gonna listen. Looking at the daily chart on this, we get up over $10, guys. Next time, this thing can run to 12. Look at that upper wick to 15 bucks. So that's a lot of potential good opportunity. And up over that, who knows how far it can go. So PEAR, I'm going to add this to my list. You never know. It could pop up again in the future. It's proven that it likes to run. And like I just said, if a stock rips and runs like that, I'm going to listen and pay attention to it because it's giving you a preview of like, hey, look at me. Look what I can do. And it did it 2 days in a row. New Year's Eve, it ran from 5 to 6.50. Then the new year here, it runs up just about $3. Effortlessly too. Very nice explosion. I love trading momentum type stocks like this, you guys. It could be some of the easiest money you've ever made, but you do have to cut it if you get bad vibes. They can be dangerous. They can. That's why I've said you have to listen to yourself, and if you pick up on bad juju, you have to cut it without even thinking. But these can be good paydays here, especially if it's really slow in the market and nothing's going on. Something like this quickly pops up. You can quickly take advantage of it and then be done for the day. Tesla just squeezed shorts faces off, huh? Look at that move. As we said, guys, never, ever, 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 ever in my career, you never short Tesla. Never, ever. Once again, it's living up to its name. People don't learn. That's the thing. Human nature never changes. I remember back when I was just starting out and learning, Tesla was the #1 shorted stock in the market. And still to this day, it's getting squeezed. So imagine you're short on something like this at 1,050 and you wake up and it's gapping up $100 a share. You just blew up your account and the new year hasn't even started yet. That's insane. And then it just continues to run the rest of the day up pretty much another $100. That's an insane move on Tesla. Insane. It did look like it wanted to crack though. I could see shorts anticipating that, connecting your lines here. It was getting really, really tight. And you had your moving averages coming together with that death cross we were talking about. With the moving averages crossing over, the death cross leads to a big downfall. People were looking for that, and boom, that's insane. That may, if you listen and have an open mind as well, that could be a statement right there made by Tesla for the upcoming new year. With electric vehicles, everything going to cryptocurrency and NFTs and the digital world and what's the electric field, as they call it. I don't know what they call it, but you guys get where I'm going with this. This could be a statement by Tesla is what I'm trying to say. That it's going to be a big year for these types of companies and stocks. Remember, always have an open mind and don't be afraid to think differently than everybody else. I don't want to be on the same page and thinking with everybody else. Because look what happened to AMC, right? I know I keep referring back to the stock. When you see a herd of people going into something, I'm going to run the other way. 90% statistics have shown 90% of people fail. All right, I'm going to listen to that as well. So the 10%, they're obviously doing everything the complete opposite as everybody else. This as well as getting a nice tight pullback on it. You could see a shot up in momentum. This is pulled back from 30. Now it's down to 26. That's a $4 per share pullback. So if this does get a momentum rip, I could see 29, 29.50. We're going to keep eyes on AMC every day because we've seen AMC in the past. When momentum hits AMC, this bad boy can rip. Am I wrong? Look at back on this day right here. From 27, it rips up just over $28. Boom, like that. And we've seen AMC run $2, $3, $4 even in a day. So that's a pretty good start to the year. And even if you didn't trade today, there's no rush, you guys. There's no rush. Always remind yourself of that. There's no rush to trade. There are so many trading days in a year. So many. And all it takes, in reality, all it takes is one home run trade that could make your whole year. So it's not about trading as much as you can. It's all about patiently waiting and waiting and waiting and waiting for that, that's my opportunity right there. And you'll know when that opportunity comes to you. Look back and reflect back when you were just sitting in the markets and you were patiently waiting, and then that play popped up out of nowhere and everything correlated and it made sense. And you pulled the trigger and you felt confident in your conviction, and boom, you made money. Remember that feeling. That's what it's about right there. Not jumping in right out of the open, unpredictable. We don't know what's going to happen. IMMX. That's how you blow up and you're not going to be around. Or something like NTRB. Everybody who kept anticipating for this to break up and up over that $10, the way I look at it, the stock has a lot of room to run if it does break that $10. So first, let the stock prove to me that it can even break that $10. That's why a lot of times I'll put like a trigger level that the stock can run up to and break. If it can break that, then all right, that's showing me strength. All right, now I'll pay closer attention to you. And from that trigger level, how much more can you rip? I'll start getting ready to take a position because we broke that downtrend. And now we can continue to push up to higher levels. I'd much rather be focused in on stocks when they're in positive, with positive energy, than negative energy. Am I right? I don't want to be getting in on something that has bad juju and bad energy, like JWEL. Let the stock first prove to me that it can break that trend and show me you want to have strength and reverse. So from going and making lower highs and lower lows to sideways action, that's a good start. Now from that sideways action, let's start making higher highs and higher lows. Then I'll start paying attention to you because we can rip 12, 13, 14, 15. That's a lot of potential there. So there's no need to battle and beat yourself up over $1.50 sideways consolidation there. And most of the time too, if you do get in on it, you got to think majority of the time people sell into the first pop, right? And then they continue to watch it go without them. So there's plenty of time and plenty of opportunity. And over the course of your guys' career, you'll slowly start to realize that. And you'll slowly start to realize, like, hey, man, just chilling, kicking back, and waiting for opportunity, that's where the easy money's made. So that's a good start to the year, you guys. Being very observant, picking up on trends that are popping up, listening to the market, listening to the market. 3 out of 4 stocks follow the overall market. It's the start of a brand new year. One day at a time, you guys. That's a 45-minute recap. So let's wrap it up on that. Good start to the week, and I'll see you guys tomorrow. Enjoy the rest of your evening. I'll see you guys later. Peace.